Good morning, listeners, and welcome to the Trade Talk podcast. Globally, the broader indices are trading in a narrow trading range, and volatility is declining on a day to day basis. In the absence of directional trend, the volumes are shrinking. Macro factors are at an almost unchanged levels. We have got some relief from rising crude oil prices. On the domestic front, Reliance and ICICI Bank posted slightly better than expected quarterly numbers, which will help our markets to open higher. Now, if we go through with our markets, then in the past week we saw some selling pressure in the market. Because of IT index, the market closed on the lower side. It was down more than 1.15%, and Sensex was also down nearly 700 to 750 points. But we saw some activity, specific buying activity in all PSU banks. The put call ratio is falling on the back of consistent call writing, which is actually impacting to the upside of the market. Markets are clearly failing to cross the level of 17,700 since last 3 days. But at the same time, 17,550, 570 is acting as a very strong support for the market. On Friday also, when the market was down, it was like below the levels of 17,570, but after falling little bit more to the levels of 17,550, we saw quick recovery, which has again closed the market above the crucial level of 17,600, 620. So for the day, the important level is again 17,700. For the week also, it is a very strong hurdle. Above that only we can expect 17,800, 860. In the beginning of the week, we mentioned that the markets are now going to spend time, or it is going to consolidate between the range of 17,850, 860 on the higher side and 17,600, 500 on the downside. So markets are more or less following to this similar sort of formation. Today we may see the levels of 17,700, but we need to see that whether the market manages to sustain to surpass the level of 17,700 or not. Above that we can expect 17,800, there where we should look for reducing some long positions. Only above the levels of 17,860 we can expect trending activity in the market. Till then we are going to see range bound sort of pattern. Below 17,550, the next level would be 17,450 and 400. Based on the overall broader pattern of the market, number of mid-cap stocks are attracting buyers. Most of them are almost 10 to 15% higher from their immediate lows, which is positive. Large cap stocks are maybe holding back on the back of quarterly numbers, but later on we are going to see specific sort of trend in the market. So maybe we are going to see some more consolidation, but if there is any correction, then we should be buyer in the market close to 17,500 to 400 levels. For the bank Nifty, 41,800 is the level. Below that only we can expect weakness. Otherwise 42,600 is the barrier. Above that we can expect rally towards 43,000 to 43,200. For the day we are going to focus on bank stocks, some auto companies, as well as some real estate stocks. So these are the sectors on which we are going to focus, and based on their specific performance, we will come out with some specific recommendation. That's all from my side. With this I am ending today's call. Thank you. Have a great day to all of you.